talk about Bajaj Finance, which is single-handedly actually dragging the index lower. And this after the management also gave a very cautious commentary. They're expecting AUM growth to slightly moderate and the ROEs to drag in FY25. My colleague Snehi is here to tell us exactly what happened in the quarter gone by, what the street is expecting, because definitely, Snehi, the stock price is not looking that great.
Well, absolutely no. Despite reporting an inline set of numbers, the stock of Bajaj Finance is not doing well at all in today's trading session. First, let's take a look at what the numbers look like. NII has come in line. There's a slight miss on the PPOP front, which is the operating profit. Slight beat coming in on the net profit front as well. NII is up 28%, PPOP is up 25.5%, and net profit is up 21% as well. NIMs have contracted by 20 bps, so this was largely in line with street expectation as well, coming in at 10.3% versus 10.5% sequentially. NNPA is also stable at 0.37% on a sequential basis. AUM is up 34%, deposit book up 35%. This is on the lines of what the company had guided for their Q4 update. They've also gone ahead and declared a dividend of 36 rupees per share. The subsidiary Bajaj Housing Finance numbers also look healthy, and the company has also formally requested the RBI to review and remove the restrictions that they have put on the e-com and Insta EMI cards. Now let's understand, despite an inline set of numbers being reported, what is weighing on the stock today, and this largely has to do with the management commentary. Management commentary is on the rather cautious side. They're reporting they're seeing AUM growth to be anywhere between 26 and 28% next year compared to the 34% that they have reported for FY25. So some slowdown is being expected over there. They're seeing ROE may drag in FY25 as well. They're seeing a 30 to 40 bips moderation in NIMs also over the next 2 quarters. Rural NPAs may decline due to the RBI's embargo. Credit costs are expected to remain elevated between 1.75 and 1.85%, and competition to limit pass-through of higher cost of funds. This is what the management had to say, and separately, brokerages also are not looking very positive when it comes to this stock. JP Morgan, however, has maintained an overweight rating with a target price of 8,500. On the other side, Macquarie has maintained neutral with a target price of 8,100, but UBS has maintained a sell rating with a target price of 6,800 rupees per share. So despite an inline set of numbers on the back of management commentary and this note coming in from UBS with a sell rating, the stock is not doing very well in today's trading session. In fact, it is beaten down as we speak.
Well, the MD of Bajaj Finance, that is Rajiv Jain, is also cautiously optimistic about the profitability going ahead. Let's listen into what he has to say.
Margin has been moderating because of rising cost of funds and gradual shift in AUM composition towards secured assets. We expect COF to peak in our assessment at this point in time by July, August, and AUM composition repivot towards secured assets to stabilize by September 24. Accordingly, we foresee a 30 to 40 basis points moderation in NIM over the next 2 quarters. From our current levels, and then stabilize from there. Profitability remain cautiously optimistic about FY25, with profit growth to be a little more rear-ended due to moderation in NIM in the first half of FY25.
Couple of quarters and technology is a part which most of, in addition to Bajaj Finance, other companies are also focusing aggressively. Definitely Bajaj Finance expect that 25% of overall business flow should be happening through technology going ahead, maybe 2-3 years down the line. That may have some sort of positive.
All right, so that's the view coming in from PNB Paribas when it comes to Bajaj Finance. But on that note, we slip into a break on this edition of Markets at Noon. When we come back, we'll talk more on what exactly.
If you like this video, then like, share and subscribe to ET Now.